It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another Real Estate Podcast. The end of our working week once again, once we get through today, and talking, as always, about your property, your trends, and what is happening in the real estate market from Adelaide to Brisbane and all places in between. And you can stream us on multiple platforms 24 hours a day, including iHeartRadio, Spotify, Apple Podcasts, and Amazon. Yes, it is a Friday, February the 7th today. Boy, this was a bit of a wake-up call to me and probably to a lot of people, especially in a world where cameras are everywhere, some of them visible, some of them not. You'd think that people would be more cautious about invading somebody's privacy, especially when it comes to space. But one Sydney landlord apparently didn't get the memo. A tenant has been horrified to discover that their landlord repeatedly sneaked into their room and even slept in their bed while they were away. I mean, what sort of a crazy person has done this? It's astounding that somebody would risk being caught so blatantly, which is why that when I'm staying in an Airbnb, I always check the place out for cameras. And that story really does serve as a good reason to do so. Even some of my friends, when I've mentioned that, they've said to me, "Oh, you've been watching too many movies." But hey, this is the very reason why. And if you're wondering what's happened to the tenants, well, hardly surprising. They're desperately in search of a new place to live. And on that note, let's catch up with Matthew Hughes, the founder and managing director of Capital Property Advisory there in Perth. And good morning to you, Matthew. Do you check out the Airbnb like I do?
Look, we've got pretty good security around our house to make sure nothing like that happens, but that's pretty scary, especially if it's a female, and certainly if she's living alone, to have someone creeping into your house and invading your privacy like that. I'd certainly be either moving or at least asking for a reduction on the rent.
All right, well, with January now behind us, let's take a look at how the year has started. I want some of your key takeaways from CoreLogic's first market report of the year.
Yeah, look, not a lot of surprises in there. There's been what we expected was a bit of a clear and steady loss of momentum. We saw that late last year, especially in the two major markets, and national home values across the country held firm. There was no change at all in January. We saw Sydney soften by 0.4%, Melbourne predictably by 0.6%, and then we saw the surprise for me was probably Adelaide leading the country in January at least at 0.7% over that quiet holiday period. I have predicted publicly that Adelaide would start to slow down ahead of Brisbane and Perth throughout this year, but it's defying my predictions at the moment. So we'll see what happens throughout the year. And then Brisbane posted 0.3% and Perth climbed 0.4%. So nothing sort of too startling in there, but we'll see how it plays out throughout the year. I do anticipate both Perth and Brisbane to strengthen throughout the year as we see these rate cuts take effect.
Yeah, and CoreLogic, I see that they've reported there's 0.4% price growth in Perth for January, while REIWA cited a significantly higher figure. This can be a little bit frustrating for people, Matthew, regarding the difference in reporting. What accounts for the discrepancy, do you think, and which source provides a more accurate measure for market growth?
Look, for me, we always rely on the CoreLogic figure. They use what they call their hedonic home value index. And so that's their primary model. And that accounts for various different property attributes like location, land size, property type, dwelling configuration and size, recent comparable sales. There's things that it can't see like development potential or recent renovations. But it's relying, instead of relying solely on median prices, their index will adjust for compositional changes in the market. So it prevents distortions that are caused by an increase in sales at the higher end or the lower end in different periods. So, and that tends to be the fault with models like REIWA and others where you have a number of sales at a higher price point and they're just looking at median prices, and that can move the needle substantially either up or down and create a distorted outcome like the one that we saw in January with CoreLogic, as you said, showing 0.4%, and I think REIWA was at 1.4%. And I think that's an indication of what we're seeing in the market and something we've been predicting, which is more demand and more sales in that sort of higher price point at $1 million plus, and that's dragging the REWA number around, and that's something we've seen historically, and we don't rely too heavily on REWA for that statistic specifically.
I guess with more and more of these real estate portals that we will see come online, the default, as Matthew says, probably just go back to CoreLogic and just do a double check on any other numbers that you are looking at. Now, we know that the year is well and truly underway to the extent that we can now probably look at some of the trends, Matthew, that you're observing and taking notice of firsthand there in Perth and the property market.
Yeah, look, we've seen a number of listings hit the market as you expect in mid to late January, but stock levels haven't yet returned to their late 2024 levels. And that's a bit surprising. I thought they'd get back there and maybe edge a little bit higher. And what we're seeing is that on the ground, I've seen a much hotter start to the year than what I anticipated would happen. I always thought that the rate cuts would bring an initial impact in terms of sentiment and confidence, and then the major sort of changes in the market would take place when we see actual borrowing capacity opening up after actual rate cuts. But we represented a client on Saturday at an auction, and we'd appraised this character home that was in need of a full gut renovation at between 1 million and 1.1, and it sold for just over 1.2 million with 3 bidders touching 1.2. So that's just one indication. We saw another house that we went to last week, a near $2 million home. There was 100 people at the first home open. So the market here is certainly in that space, so that 1 to 2 million and maybe just above, is really red hot to kick off the year. And I think that's only going to get exacerbated once we see those rate cuts. Below 1 million, quality property is still attracting high demand and it's selling very quickly. But inferior properties and inferior suburbs are starting to behave like they should, and they're taking longer to sell now.
Well, that's interesting. So there you go. Matthew is saying 2025 has started a little bit hotter than what he expected. And we'll come back after this and talk more about the Perth property market.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
And right now, let's go to Brisbane and to catch up with Melinda, talking about those first home buyers at the moment in your market, buying up the units everywhere, left and right.
Certainly is the case. And again, if we look back at the housing finance commitments for Queensland, we've got 27.5% of housing finance commitments being made up of first home buyers. And a lot of those first home buyers are considering units and or townhouses here in Brisbane, because typically a first home buyer is shopping at the more affordable end of the market. And to buy a house in some of the areas of Greater Brisbane with an entry-level budget, it means there's a huge compromise on location. And people today want to live a little closer to where they work. They want to be in locations that are more convenient with the lifestyle.
We are more than just a real estate podcast. We cover a multitude of subjects, including property data, current buyer-seller sentiment, and the mood of the market. Follow each week all of the main talking points and know your property.
And it is a Real Estate Friday. Yeah, we're sort of chugging through these weeks well and truly, as we mentioned, into 2025. Matthew Hughes there in Perth is with me. You've previously mentioned that Perth's more affordable price brackets are no longer offering the same value for investors as they once did. Yes, Perth continues to expand, as we've talked about that very issue earlier in the week. So let's pick your brain here. Is that still the case? And if so, what is driving the shift?
Yeah, look, as you know, we've seen over the last couple of years, our market and the excessive growth that we've had has really been driven in that bottom quartile of pricing. And so for me, if you look at the market in a more segmented or nuanced way, that bottom quartile for me is very much progressed through this particular cycle. And I think that whilst there's still growth ahead in this cycle in that price point, and I'm still bullish on Perth long term, I'm not super comfortable putting clients into the type of suburbs that you can get a house on a full parcel of land for a sub, say, 700 or 750K budget. I think that whilst you'll get a little bit more growth, the downside risk when the market eventually softens is too great for me. And I think there's better opportunities out there. We're still getting a number of a reasonable amount of inquiry from investors for Perth, but any clients that come to us with that more restricted budget are being encouraged to consider other markets, and most are following our advice and engaging with our Melbourne-based team to find a suitable investment in one of our approved suburbs over in Victoria, where we see a lot more growth potential over the next 3 to 5 years in that particular price sector. But we're also starting to see an increasing amount of inquiry now from home buyers in Perth, which is something that we're anticipating. And the vast majority of our active buyers here now are actually owner-occupiers with budgets of 1 to 2 million or more.
Yeah, and as far as Perth homeowners considering upgrading to a bigger home, or as many people call it these days, a more aspirational home or a more desirable suburb, where is the smart thinking about all of that in the current market?
Look, I would suggest anyone considering upgrading their home, if you have the capacity to do it now within your risk profile and your financial capacity, then I would suggest that you hurry. Competition's already quite intense, as I spoke about earlier, and this is a trend that we're going to continue to see throughout the year when we see the real impact of rate cuts on borrowing capacity, as opposed to what we're seeing now, which is mostly just confidence and sentiment based. I think what we're doing with clients who are coming to see us now is we're trying to sit them with our senior finance advisor and myself first and just explore the option of whether they have the ability to retain their existing home and refinance into their new home as opposed to selling and then buying, just to try and maximise the outcomes on both transactions so that they can buy at today's prices on the new, more expensive home, but then hang on to the old one and rent it out for a period and potentially pick up a fair bit more capital growth there. And that could be a not insignificant amount of money, which could easily sort of partially or fully offset the purchase costs on the new home and help you reduce that debt on the new home as well once you actually transact on that final sale.
All right, so plenty of things to think about as we head into another weekend. Perth is always top of mind, has been for the last 2 or 3 years. Hey, enjoy your weekend coming up. Enjoy the Friday first off. And once again, Matthew, thanks for coming on to the Real Estate Breakfast.
Thank you for having me.
From the emotion of property, the economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on the market. Stay informed with us and know your property.
What is it really like working in the real estate industry? Can you make all this money that people talk about? How do you sort of curb some of that enthusiasm around the money with the reality? What do you sort of typically talk to people about when they make that inquiry to you?
I think real estate has incredible opportunities, but I think that there is a misconception about how quickly or potentially easily people can get to that top percentile of agents operating. It takes them a lot longer than I think what they anticipate to get their momentum going. So you've got to learn the right habits. You've got to set yourself up correctly from the beginning if you're going into sales. And then you've got to build, a digital footprint. You've got to get to know the community. You've got to learn how to transact and negotiate. So there's quite a lead time. I think it looks quite glamorous from the outside. It's a bit harder than I think what it looks like for those coming in.
We connect you to the best real estate information across Australia. The Real Estate Podcast.